I have made $40,000 this month using Bookmap, and I'm going to show you exactly how I do it. Bookmap is a tool that you can use to read level 2 in times and sales. Let's get into the basics of Bookmap really fast before we get into anything else. Now, when it comes to Bookmap, you have a bunch of different things you look at, and people get super confused when they first jump into Bookmap because it does look very crazy if you're just used to a normal candlestick chart. But if you break it down little by little, it becomes incredibly simple. All you have on Bookmap, right, is you have the limit orders, right, the offers. Basically, these are all the limit orders in the market. Now, if it's above the current price level, these will be sell offers. If it's below the current price level, they'll be buy offers. And that's the same every single time. Now, the red bubbles you see right here, right, the red bubbles you see are the aggressive sellers, all the offers, right, all the sellers who are selling at the bid. They're selling at a cheaper price, right? These are the times and sales. And the green bubbles are all the aggressive buyers, buyers who are buying the ask, paying a more expensive price, hence they're being aggressive. Now, this lets you see the relationship between the two in a much more prettier, visually appealing aspect because for Bookmap, to read times and sales in level 2, you would be given this right here. And you can kind of tell it's super jumbled, too many numbers, moves way too fast, and not much you can do off of this. And I used to use this for the longest time. It's still valid. We can still use it, but I much prefer using Bookmap, which is a much more visually appealing way, an easier way to read level 2 in times and sales and the relationship between the two. But if you kind of still confused on Bookmap, I have a much better video on my channel, the 2-hour course that kind of goes through and breaks down the simplicity of Bookmap, what it is, how to read it. But in this video, I'm going to show you exactly how you can use this to place significant trades and to actually make money. And I've been using this whole month to make about $40,000. Now, before we get into Bookmap, you have to understand that we are trading supply and demand, right? So I'll only start using Bookmap once we actually hit supply and or demand, right? I don't have demand right here. Now, once that happens, then I can zoom into Bookmap and start looking for an entry. Now, something to take notice of is Bookmap does have a couple of different things that goes on with it. So let's just go ahead and jump right into it. So you have absorption and exhaustion, the two things we're going to be talking about. Absorption is when you see aggressive buyers hit a passive seller and not move price up, right? These passive sellers are absorbing the aggressive buyers. And you'll see this on the other side where you see passive buyers absorb aggressive sellers. And this is what absorption means. It means that there's more passive offers, more of the limit orders, either absorbing the aggressiveness from buyers or sellers. This is what absorption means, right? And exhaustion, on the other hand, is when you see the seller and or buyers die out or get incredibly exhausted. So that basically means as they're pushing down to a level, you see the sellers disappear. Sellers are getting exhausted. As they're pushing up into the level, you see buyers get smaller and smaller. Buyers are getting exhausted. Again, we have a whole full course on this, but I'm just kind of giving you the basic concepts to understand how I've been using this past month to make $40,000. And it's a great tool to use, right? You zoom in right here, just from today, we have absorption at the top, right? We have exhaustion then coming in after that. And what will happen is, right, the market will move up until the last buyer buys. So if there's more passive sellers and aggressive buyers, the market will then move down. And the same thing vice versa. So how I really use this to take trades becomes very simple once you understand this. The next thing we need to understand is the relationship between the buyers and sellers, right? So buyers and sellers losing control, right? We'll talk about that. We'll just kind of mention absorption, exhaustion, trapped, the volume, whatever it is. Basically, all it is absorption and exhaustion. Trap players are absorption. The volume dying out is exhaustion. The balance range, right? We're going to look at that on the tape and price action with candlesticks and buyers and sellers taking or regaining control. These are the steps, or the steps to identify this, how to use this for an entry trigger is actually pretty simple. First thing we need to do is the passive participants, right? We need to figure out what's going on. Who is in control first, right? Are the aggressive buyers filling passive sellers and holding above, or aggressive sellers filling passive buyers offers and holding below? This will tell us who's in control. So step number 1, right? So basically what that means is just looking at today's action, right? Are the sellers filling passive buy offers and making new lows, or are the buyers filling passive sell offers and holding above? Sorry for that delay. And we're in a balanced range right now. We're chopping, so both of them are really in control. Take liquidity on one side, back on the other side, so nobody's in control. It's a balanced range and it's very, very fair, right? Versus when we see a unbalanced range, basically where a significant person is in control, it looks very, very different. But now we have something balanced, right? So let's go back into this. Once we know who's in control, just by reading, and again, you can honestly just use the footprint chart, or not the footprint chart, you can just use regular old candlesticks to determine who's in control, right? Using the 5-minute chart, are we making higher highs and higher lows? We're making lower lows and lower highs. Right now, it's No News Monday. We're chopping. Did not trade today because of that. And right here, right, we're making higher highs, higher lows. And if you look at the Bookmap, you'll see these buyers filling passive buy offers and holding above price, right? From this little bit of a move up we had here pre-market. You're seeing buyers take control, fill passive offers, and hold above prices. These level 2 here will load very, very, very soon. But to continue off of that, the next step is the trigger, right? If we are going for a long off demand, we need to see a trigger first, right? So we know, so as we're moving into demand, obviously we're going to be making a move down. So we will know as we're coming into demand that the sellers are in control because we're making a move down. We'll look at Bookmap. We'll see, okay, passive buy offers are not holding up these passive sellers. So now we have to wait. We have to wait for our trigger, which is either going to be absorption and or exhaustion. So with that being said, right, as we're moving down into demand, kind of we had this big move down into demand, the market started moving up. What do we see right here, right? What do we see right here that we just talked about? We see clear, right, very clear, very open exhaustion from sellers. Basically, every time we try to make these new lows, we see sellers then dying out, right? That is the first step that we are looking for. Same thing right here, we see exhaustion, right? Same thing right here, we see exhaustion. That's the first step that we're gonna be looking for. The next step is, it could be exhaustion, it could be absorption, it could be dead volume, which basically is exhaustion. Imbalances, that's in the footprint chart, I'm not gonna talk about that right now, or trap participants, which is basically a really big seller or buyer that gets absorbed, and it will be pretty significant. It'll be much bigger than this, probably like 2 or 3 times the size of this. I chose for 3,000 delta, or just the volume of the bidder asking at 3,000, positive or negative, depending on the side. Then after that, this is where we actually enter after a trigger. Once we know who's in control, right, and then it comes into our key level, then we see them lose control, and then we want to see the other side regain control. Now, what does that mean, right? We pull into demand. I see absorption, and then I see a aggressive buyer fill passive sell offer, just one, and hold above. That's my signal for entry. Same thing on the other side. When I see an aggressive seller fill a passive buy offer and hold below, that's my signal for entry for these shorts. So the objective is to identify when a structure shift happens in the market auction, right? It's going to be inside the tape, level 2 in times and sales. So to do that, we have to understand the auction, understand what the market actually is, right? So it's the auction theory. So it describes how buyers and sellers keep adjusting their bids and offers until they agree on a specific certain price, where the most trading happens, right? Volume is everything. So a good analogy to understand this is like a big farmer's market where everybody shouts out what they'll pay or accept, and the price will settle when most people say yes, when most people agree on price, which is why we have balanced ranges, is when the price will actually settle. And this is incredibly important. So the market trends will either be bullish, which just means that when aggressive or passive buyers stay in control and keep holding higher prices, right? Or bearish. A bearish one happens when aggressive or passive sellers stay in control and keep holding lower prices. You can use this candlestick charts. You can also use this on the level 2 and time to sales, which for me helps you avoid a lot of fake outs. But the balanced range will happen when both buyers and sellers are agreeing on price and neither side is really in control. We have a balanced, fair price. People like this price level, a lot of volume here. People have been trading in here and they want to stay at this price point. And especially in a higher time frame, you'll see this kind of balanced range before the market shifts direction. So it'll go up, balance. It'll keep going up, balance, and it'll move down, balance. And you'll see the consolidation happen over and over and over again, which is why we never guess the breakout of a balanced range. We wait for confirmation, and then we wait for us to actually follow the move, not try to predict. We react, right, after we break out of the balanced range. Kind of something that's happening today where we are in a balanced range and not playing the breakout of each side because we keep grabbing liquidity and we just sit in the balanced range, no news Monday, to be expected, which is why we didn't trade today, right? So with that in mind, the next thing we have to look at is how we will actually be using this in real time to take a trade. So for example, we can kind of go over a trade. We'll just go over today's market, actually. Just go over today's market. So today's market, we sold off into supply, and then we started to chop around. Now, first thing we look for, in demand, right? Once we're in demand, what do we need to see now? We need to see all the different signals come in and actually hit. So let's see, today's balance. We're not going to have any good examples. Let's see if we can kind of move back to maybe last time we traded, which was a little bit before. Alrighty, so this is a great example right here. So this is exactly kind of what you want to see, right? You get a move down. Again, the structure has to be bearish. And if you're uncertain of how to make these structures or make your strategy or plan, watch my other videos on the YouTube channel where I go over all of this, right? Today, we're going to be focusing on Bookmap here, but we need to see, obviously, we move down. What's the first step? Who's in control? Sellers in control, filling these offers and moving down. What is the trigger for reversal? Right here, we have exhaustion from these buyers being pretty big to in control to getting exhausted at this point. Remember, they have to follow the 4-hour structure, but we're in demand. So being in demand is super key. Now that we have that figured out, what's the next thing we have to do? We have to wait for buyers to fill passive sell offers and hold above price. So sellers in control, step number 1. Step number 2, sellers get exhausted. Step number 3, buyers then start to fill passive sell offers and hold above price. So what I would do is after seeing this buyer fill a passive seller and hold above price, I would already look for an entry, right? I would look for an entry right as I see this buyer fill a passive sell offer and make a new bid above. That's all I want. Super simple. Then I would put my stop loss right below where we have the exhaustion, meaning that this right here would be my invalidation, because I'm telling myself, okay, in demand, we just had sellers die off in demand. So if we make a new low, when we see sellers come back into this level and make a new low beneath it, this trade will be invalid. My thesis of beating the market going up will be incorrect, right? So it's super simple. In demand, the 4-hour structure is to the upside. We wait for price to push into demand, wait for exhaustion and or absorption. Right here we see exhaustion, then we wait for a buyer to step in and take control. Whenever this buyer fills a passive sell offer and holds above and makes it kind of a higher bid above that passive seller, we hop in, we put our stop loss right underneath where we have the exhaustion, absorption, or whatever it is. Then we target the high, right? We target the next level of liquidity, which in this case right here would be these highs right here. Right, great, like 3-to-1 R&R in this setup, and it's very, very simple. You will see this happen multiple times in multiple different setups, right? So right here we have a good example of something you could also do on the other side, on the short side. So right here, what do we see? Buyers in control on the way up into a major bed of liquidity. We see buyers get exhausted at the very top. So first things first, where would my invalidation be? Right above these offers where buyers got exhausted. And then we see, or sorry, not exhausted, absorption, right? We see buyers absorption to this major liquidity level. Now, what this basically means is, right, big buyer, try to fill these offers, but what do you see? There's leftover offers, meaning that there's more passive sellers here than there were aggressive buyers, indicating the market then must move down. It's important to combine this with overall context as well. We're not just going to short a random price on Bookmap. If I was shorting this, this has to be in supply, and the 4-hour structure has to be bearish. That aligns. I can also short this. Now, this happens, right? So we get what? Buyers in control, cool, in supply, buyers get absorbed. A lot of liquidity, not enough aggressive buyers to break through the liquidity. Then we wait. We see price moving down. Then we see right here, a big seller fill a passive buy offer and we make a new low. So right as soon as I see this and the new low happens, I'm in right here. I'm putting my stop loss right here, right? And I'm targeting the next low of liquidity, which is right here, right at these 68s. And it's very simple. You can do this over and over and over again. It will give you the same result. It doesn't work all the time, but if you combine it with overall context, it's super key. Now, what does overall context actually even mean? So what I do is I look at the 4-hour chart. What is the 4-hour chart telling us? What's the market right now? Super bullish and all-time highs and chopping. So we have a choppy session, balanced range. Now, if this balanced range wasn't an all-time high, I would be okay with shorting the top and longing the bottom, but it's all-time high. I don't want to short the top. So what that means is A+ setup for me, and where I can use Bookmap, would be a long off the floor right here using Bookmap, meaning we push down into demand, which is we have demand right here. We see sellers get absorbed or exhausted, and whenever we see a buyer take control and step back in, we're into the position, we're in the trade, and we put our stop loss underneath it, and we put our take profit at liquidity and or VWAP. I use VWAP a lot for my take profits as well, but in this instance today, we have choppy, no news Monday, no reason for me to take this trade, plus VWAP is in the middle of the balance range. Worst conditions that we can possibly ever be in. If you took a trade today, really ask yourself, was it worth it? Was it worth it? Now, with that being said, guys, that is the whole video. Hope y'all enjoyed. Hope you learned something new. If you want more information on Bookmap, leave a comment down below on what video you want to see next, or watch my other videos. I have a bunch of videos on Bookmap, kind of more beginner stuff. If you want more advanced stuff here on this channel, let me know, and I'll go ahead and post that for y'all as well. And I'll see you in the next video. Please make sure to subscribe and take care.